Welcome to America's Heroes Group.
Welcome to America's Heroes Group. This time we're back with our community outreach and our partner, Katz, Milanec. Today is Saturday, June 24, 2023. June is LGBTQ Pride and PTSD Awareness Month. Our host is Kelley. I'm Sean Claiborne, the co-host. Our executive producer is Glenda Smith. And our digital media producer is Ivan Ortega of Scotch Arnold Productions. And you've heard his voice before, of course, on our show, giving you great information about taxes. That is Dave Milanec. He's a CPA and president and founder of Katz Milanec Incorporated. And he's also a military family member. We're talking about 2023 tax filing updates. What do you got to tell us, David? What's going on? Dave, you with us? There you are. I lost you for a second.
Yeah. So what I wanted to talk about today was different kind of case stories that I have from my office that the audience might be able to, relate to, that ways that we can help people and help them kind of save on their taxes and save money.
Mm-hmm. And you talked about this once before, that it's important to not be kind of after the fact or reactive to when you're doing your taxes, or even trying to think about how to plan for taxes. A lot of times we think about taxes after the tax bill is on its way. But if you can start getting ahead of it, you can save money by thinking about what are some of the things you could be doing in 2023, while we still have a few months left in the year, to try to make some tax savings and even carry that into next year. What can you do in 2024 to save money on your taxes? So tell us some of those stories you got.
Yeah. So like one example would be someone, I've got a business owner, right, that they have quite a bit of income. There's several ways that we help them with their tax planning, and that's typically the best way to do it. Like you said, is to really plan for it. Because if you're failing to plan, you're planning to fail, as I'm sure any military person would know. So with this person, we typically help them with different strategies with asset acquisition, things of that nature that will allow them to when you buy assets, you can actually depreciate them fully in the year you purchase them, even if you finance them, whatever the case may be. So we discuss different asset acquisition strategies with them. In addition to that, we also help them figure out what's going to be most advantageous. We also actually help them figure out what the amount is that they have to pay in, what the total is that they have to pay in, so that when that day comes that they have to file their tax return, yes, they've paid some money in and they've had to cut that check, but they know they're getting a refund, and they know they're getting a significant refund, and that's what they like to do. So if we can customize the tax plan based on what your preferences are. If you want to save money and if you want to keep the money in your pocket now, we can get you to the point where you don't have a balance, but you're also not going to get a refund. If you're the type of person that loves to get that big refund check, we can help you put enough away that you're going to get that big refund in your pocket. Another big thing that actually helps in those situations with the business owners especially is qualified business income deduction. It's an automatic 20% savings off of whatever you make in profits.
Wow. I like the idea that you can buy something, but even finance something. So you don't even have to have the cash up front. You can go and borrow the money to buy things for your business, but still depreciate that on your taxes. Still write that as a tax write-off, because you did spend money, even though it was not from money from your own bank account. It was money that you borrowed to do that. And even the expenses that I would imagine that you are that you have associated with the cost of financing, like the interest you're paying on those loans, also tax deductions, correct?
Absolutely, 100%. So you can actually deduct interest the same year that you finance something. You can finance it. Maybe you've only spent a total of, $3,000 or $4,000 cash out of your pocket, out of your business, but in total, what you're able to deduct on your tax return, it could be north of $50,000, $60,000, and that can make a huge difference in somebody's tax bill. you're talking $10, $20, $30,000 that you could be saving just by doing something like that with one asset, let alone if you do several assets.
Now, do you see businesses, small businesses, buy assets for the business, use them for the business, and then maybe years later, maybe purchase those things out of the business or sell them out of the business to a family member or someone else, or donate them possibly even to a charity to increase the use of those?
Well, that's actually one of my favorite. That's actually one of my favorite tax saving strategies. Is at the end of the useful life of the asset. At that point, you've fully depreciated it off your books.
Mm-hmm.
If you sell it, you're actually gonna create a gain for yourself, and then that's gonna create taxable income. Instead of doing that, what you can do is donate that asset. You haven't actually received any monetary value, but you do get a charitable contribution for that. So at that point, it once again becomes a deduction rather than becoming an item of profit for you.
Wow. I think that's a smart way to do things, and you can keep because the thing might be still useful. It could be a vehicle, it could be computers, it could be copiers, things like that, and that you can still use and help the community with it, but it doesn't become an expense on your books. You basically have depreciated all that value to get your tax write-offs, but then when you can't depreciate anymore, you probably about time to upgrade anyway. So go ahead and donate it, get another tax deduction.
Exactly. That way you don't end up having to pay taxes on getting rid of it, but you've hopefully helped a good cause, and you get an extra tax benefit out of it at the end.
So let me ask you this. What do you think is probably the number one thing, besides not planning, because we're talking about that, it's the main topic of what we kind of went into so far, but what are one of the main things you see business owners not really take advantage of besides deductions on their taxes? What are the key mistakes that you see business owners make nowadays? And they're just not aware of these things.
Honestly, the biggest mistake that I see business owners making nowadays is basically just not knowing their numbers and not understanding how to plan for things and how to appropriately plan the financial aspect of their business. And that's understandable, because if somebody goes into business making pizzas, for example, they may make the best pizza in town. They probably do. That's probably why they started a business. But they don't know the first thing about the fact that they have to charge sales tax for it. They don't know the first thing about which payment processor is going to give them the best deal so they don't pay as much for payment processing. They don't know the first thing about depreciating the assets they purchased to write it off on their taxes and get that tax savings. They don't know the first thing about planning necessarily. They may know about how they need to order their stock in order to keep it in stock, but they don't know how to plan that the best way to make it the most profitable for them. So having the help of someone who can guide you and kind of help you see those numbers and understand it is really crucial when you're trying to grow and develop a business.
So how do people get a hold of you? Because I know you do business in all 50 states. You're a licensed CPA. Yep. Tell us how can people get help from your firm?
Well, you can call us at 708-914-8220. Again, 708-914-8220, or visit our website, katzmilanec.com, and you can request an appointment there. Any way you want to reach out to us, we're available, and we're happy to help.
Wow. I really appreciate that, because that's something that people need to really understand, is that, like I said, not being reactive but being proactive, thinking about what you're trying to accomplish with your business, but just oftentimes it's having some guidance, having somebody there that can kind of help you through the process to understand what you're not looking at, because you're so focused on what you do. Your skill set might be very creative. Maybe you're making pizzas, or maybe you're an artist, or maybe you're doing construction, but you're not thinking about the numbers. Not everybody are numbers people, which is, I think, really important that people have to realize. You have to know your limitations and take advantage of those services that are out there. Some people think that if I hire all these people, it's going to be expensive. They don't want to get an attorney because they think it's expensive. They don't want to get a CPA because they think it's expensive. What do you say about that idea?
It's less expensive to hire a professional and and get your taxes done the right way and get it done appropriately than it is to try to clean it up after the fact. It's going to be a whole lot more expensive on the back end than it is on the front end. Whether you're a business owner who needs to plan out your taxes really well, or you're just a regular person who just has a tax filing requirement every year. Sometimes I've seen people, they just, for whatever reason, they don't bother to file their taxes for a few years. Family member dies, they get depressed. 1 year turns into 5 years. I've seen it happen so many times. And the IRS, if you don't file, they'll do something called file a substitute for return for you. Now, what a substitute for return is the IRS has taken the absolute worst case scenario that you could possibly have based on the documents that they have for you, and they've assigned you a tax liability based on that. Now, if you are in that situation, and I've seen several people in that situation, you could owe over $100,000. But that's not the end of the story, because you still, in that situation, have the ability to file an original return and get rid of that tax liability just by filing your tax return. You can completely rid yourself of that liability sometimes. I've actually done that before, where I had somebody who owed over $150,000. I took them down to under $5,000 by filing original returns because they had substitute for returns.
Wow. The thing of it is, people don't realize the IRS, when you get that nasty ground from the IRS, whether it's for a business or even in your personal life for not filing or doing something wrong, they always give you the worst case scenario. They always say, well, maybe he owes $5,000, maybe he owes $6,000. What if say he owes $7,000 just to be safe? Let's make sure we get all our money from. So they always give you the worst case scenario. So you have to take it to a professional and really get that stuff whittled down, because there's so much stuff that you're not taking advantage of. But one thing I want to ask you though too is, and so what are some of because there's paper trails that you generate, whether you're a business or even as a regular individual, that are taxed to go to the IRS, these 1099s and things like that. What are some of the things that businesses do without thinking about it? Because you might even be a cash business, and you're thinking that you're getting away with something that you shouldn't be getting away with. I'm not going to name names, but you still generate a history that the IRS can see that can trigger either an audit or trigger that nasty gram you mentioned from the IRS.
Well, yeah, absolutely. So there's all different kinds of things that can do that. Like you mentioned, you may think you're doing cash business, but then you start deciding to process credit cards. Well, now you have a 1099-K, and now that 1099-K is going to go on your wage and income transcript. And that's the source that the IRS uses to determine whether or not you've put everything on your tax return. Now, I can go get those wage and income transcripts from the IRS if necessary. I've done it before. I pull down everything for a client. It's called an investigation. If you're not sure of your tax situation, I can get everything that the IRS has on you and make you very clear on what your tax situation is. Mm-hmm. But yes, what we were discussing, 1099-Ks. If you start processing credit cards, you're going to get one of those. You have to report that. You're effectively a business at that point. You have to report that as business income, and you can take expenses against it, but you have to know what you can take against it. Sometimes people sell homes and don't realize they're going to get a document called a 1099-S. It's a sale of property. Sometimes people get foreclosed on their homes and they get a document called a 1099-C, which is a cancellation of debt income. That's when you have a mortgage, you get foreclosed on, bank takes your house, but now you had $175,000 that you owed on it. Well, now the bank has reported it as a cancellation of debt, and now you have to pay income tax on $175,000, unless you come to someone like me who can get you out of it. Give us a call if you find yourself in any of these situations, 708-914-8220. We can get all the information from the IRS, and we can get you out of these situations, get you out of these jams, and help you plan things so that you don't have problems in the future.
Wow. And then one thing I've seen with seniors, because maybe they're used to doing their taxes themselves for many years, and then as their income changes and their lives and situations changes, or maybe they have a death in the family, a spouse might have passed away, or a caregiver. Now they're doing their taxes have changed, or tax situation have changed, but they haven't changed the way they're doing their taxes. So they make mistakes, and they sometimes owe money to the IRS. I've seen cases where the IRS says, okay, because of they're maybe in some kind of financial hardship, where they'll say, well, we're not going to take all your assets, or if you hear the horror stories of I remember there was Ashton Kutcher used to have a show called Punk on MTV. Remember that show? Ever seen that?
Yes.
They did a trick on Justin Timberlake where the IRS pulls up in front of his house and takes all of his assets because he didn't file his taxes, but it was a scam. It was like a joke, whatever. But we always have that horror story, and some of us have heard horror stories where if you owe the IRS like a penny, they can come in and seize your house. Well, first, is that even accurate? But then if you are in a situation where you owe the IRS a ton of money and you're worried about what they can do to you, tell us what they can do to you. I'd like to know. But then, can you say, well, I don't have any money? What is your recourse? Can they just not? Can they do something? Can you do something different?
Well, first off, if you owe a penny, if you owe under $1, typically the IRS is going to write that off. Okay. There's a rule that if you owe less than $1, they write it off automatically, even if it's not at the 10-year statute of limitations. That's the first thing. Second thing I just mentioned, there's a 10-year statute of limitations on any collections. So if you've had that debt for 10 years and they haven't collected it, they're not even allowed to collect it anymore.
Wow.
Now there are things that can stop that clock from running, but if you have, and one of those things that you have to do to even start the clock from running is to file your tax return. So if you don't file your tax return for a year, the IRS could potentially come back on you at any time and collect. So it's very important to make sure you're filing your tax returns unless you don't have a filing requirement.
So some people out there got to listen to what he just said. I ain't going to name names, but there's some people that need to listen to what he just said. If you have not filed a return, the clock is not ticking yet.
Exactly, and the clock ticking is very huge because they only have 3 years from the date you file to assess, and they only have 10 years to collect. Now, if you are in a financial hardship, there are a couple of ways that you can get out of things. There's a more temporary fix and a more permanent fix. The temporary fix is called currently not collectible status. Basically, someone calls the IRS, either you call the IRS or someone calls on your behalf, and basically tells them, look, I don't have the money right now. They go through a series of questions with you. If you've hired a professional, the professional's hopefully already done the evaluation to confirm that they can't collect from you, and then the IRS just basically stops, and they stop for about 2 years.
Wow. When
you do that. Now that is a good temporary solution if you're in a real bind, they send you a notice of intent to levy or something like that. But the more permanent solution when you're in that financial hardship situation is called an offer in compromise. Now, an offer in compromise is a contract between you and the IRS where you agree to file and pay your taxes timely for 5 years, and in exchange for that, the IRS is going to completely forgive all of the debt you owe other than the amount you agree to pay in the contract. Usually when I do an offer in compromise, I put that amount at $500. So you could owe $1 million to the IRS. You don't have $1 million to pay. If I do the analysis and I confirm that you're able to offer $500, we'll put it in for $500. And we go through the process, you send in paperwork, you talk to what's called an offer examiner. They typically come back with some questions. You got to answer the questions. Once they approve it, you get a letter in the mail that says we're approving your offer for $500, and then $999,500 completely gets wiped off your slate.
Wow.
As long as you file and pay timely the next 5 years.
Wow, that is amazing. Tell us once again, how do we get in contact with you?
Give us a call at 708-914-8220 or visit our website, katzmilanec.com. That's KATZMILANEC.com. And I'll give the number one more time. It's 708-914-8220.
That's Dave Milanec. He's a CPA and president and founder of Katz Milanec Incorporated and a military family member. Thanks for your time.
Thank you.
This is America's Heroes Group. We'll be right back. And make sure you do your taxes and get help if you don't know what you're doing. Words of wisdom.